Good morning, everybody. Happy Thursday. It's April 13, 2023. Great to be with all of you today. My name is Bob Lang, and I run explosiveoptions.net. And an amazing chat room here with some amazing people. Love being here. I'm here every single day. We have some great trade ideas as well, too. There's Jim. There's Dave. Craig is there. Eric, Joel, TJ, Terry, and Don is right there. So we have over 230 people in the room every single day. Come by, check us out, see what we're doing as well too. But let's talk about markets here and what's moving things. So far we have a bit of a pop in equity futures this morning. Volatility down. And this kind of happens when news releases happen. We see a jump up in volatility or a slight move. A lot less exaggerated now with VIX down in the teens. But we can see a bit of a bump up in volatility as we saw yesterday up to 20%. And then once the news is released, then volatility gets sold, right? That's just, I'm not trying to rationalize or reason it. That's just the protocol right now, how traders are reacting to events or news. And in this case, it was the release of the production PPI number that came out a little bit ago. So we'll take a look at that in just a second. So futures are up about 14 handles. The Dow Industrial is about 69, Nasdaq roughly about the same amount. We also have again, we saw the producer prices came out a little while ago. Let's take a look at those, and you can see that producer prices on the headline were down. We're only up 2.7%, less than the 3, down from 4.9 last month. We also saw the core in negative month over month. The core PPI year over year, though, 3.4, and then PPI ex food and energy 3.6, which was higher than it was estimated here. But the headline number was good. The core number was good. The headline number, again, minus 0.5. So that's going to be a good negative reading. It's the second negative reading we had on PPI for the past 4 months. So, that's going to drive inflation numbers down. But it's not to the extent that producer prices coming down, that the companies that take delivery of these producer prices are not necessarily going to lower prices across the board to the end user or maybe the consumer, and we saw that in the consumer prices yesterday. So it's a gradual effect here. I don't think we see anything here in these numbers that is going to get the Fed off of another rate hike or 2 or maybe 3, right? They have to get it above inflation here in order to feel comfortable that they're done. But as they've been saying for a while, that higher rates for longer, we could have high rates for a whole year, and that's going to be difficult for a lot of people to comprehend, because when interest rates are high, it means that hurdle rate for earnings has gotten even higher as well too. So enough with that. Let's talk about charts here. So let's take a look at this is the 10-year yield bond. I wanted to bring this up this morning, and we saw a big pop above 4% for like a little bit at the beginning of March, but ever since it's been declining here. Some people are saying that the bond market, the 10-year and the 30-year and the 5-year, are trying to force the Fed's hand to cut interest rates. I don't see that happening anytime soon. We'll get to that Fed watch chart in just a moment. Lower highs, lower lows. If we get down even further below to 3.2%, it's going to get quite interesting. So the 2-year yield dropped yesterday as well too. Here's the 5-year. FVX is a symbol on that one, and that's down to 3.4. Still a bit higher than the 10-year, but about even over here. So again, the trend in rates has been down, which no wonder. The growth stocks have been performing well so far in 2023. The FedWatch tool shows a let's see, now we're down to, we were up 70% yesterday. Now we're down to 62%. Still 62% chance of a rate hike next month. That's on May 3rd. And that would be just before the next jobs report. Yeah, next jobs report comes in on the 5th, so that'd be just before the next jobs report. So we'll see if they follow through with that. There's going to be quite a bit of data between now and the next Fed meeting, which is May 3rd. So we'll be watching this dynamic here. But if you go out a little bit further, you see if we do get up to 5% on the funds rate, you see the market is trying to price in rate cuts and go all the way out to September. We see 450 to 475. That would be up to 5 and 2 rate cuts. I guess the Fed minutes yesterday kind of portrayed that the Fed was looking for a mild recession in 2023. That would make sense with their forecast. With a first quarter strong GDP so far, maybe above 2%, 2 to 2.4, and then now second quarter GDP. Let's take a look at that one. Atlanta Fed, what they're looking at right now is a estimate for coming up right here right now. Estimate for first quarter, I think it was down to like 1.6 to 2% in the this website's not working here right now. Here we go. 2.2 now. It was down to 1.6 last week. We're up to their estimate for the second quarter is at 2.2. And on April 27th, I believe we're going to have the first look GDP estimate for first quarter, which the Atlanta Fed came in and was looking at 2.4 to 2.6% on the first quarter. So the first quarter, pretty strong numbers. And now, of course, remember something. Last year we were negative in the first quarter and negative in the second quarter. It was technically the definition of a recession, but nobody really believed it was a recession. Of course, you move the goalpost, and that's what happened. So, in any event, let's take a look at a few other charts as well too. I wanted to look at stocks above their 50-day moving average in the S&P 500. We look at this chart a lot, and we always say that if the lines are in the box, that it's no good. So we went above the box towards the end of March, and then started making a run back down over here. But we bounced off the box. So let's chalk up a win for the bulls in this situation over here. We are at the upper end of the range in the S&P 500. I want to show this chart here that I put out earlier today on the S&P 500. Now here's a weekly chart, right? And we're going to go back to towards 2020, right? And what I want to show you here is that the contracting volatility over the past couple of years is having a huge effect here. And in fact, the lack of volatility now in the markets has shown us that we're going to have a very tight range in 2023, and that's going to be very frustrating for a lot of people, right? Here was the range in 2021, and here was the range in 2022, and you can see, and here is the range so far in 2023. So look over to the right. You see the box here, and you can see it's just basically on the side. So if we have this really tight range all year long, it's going to be very frustrating. 400 to 500 points versus what we had in 2022, 4,700 all the way down to 3,500, 1,200 point range. And in 2021, similarly, 3,700 up to 4,800, 1,100 point range. And then in 2020, of course, with that big drop in for the pandemic, 2,200 all the way up to 36, 3,700. So 1,500 point range. So over 1,000 point range. So if this continues on in 2023, it's going to be very frustrating because people are hoping they're hoping for a breakout, or they're hoping to the upside, or hoping for a breakout to the downside. And if it just doesn't happen, we're gonna have some. It's gonna be a very, very difficult market to trade. You can trade this, you could trade this, and even trade this as well too, but without much support. And again, the Fed is likely to stay with higher rates for a longer period of time, probably into 2024. I don't believe the market is correct here, unless there's some sort of severe recession that the Fed needs to cut interest rates. And when they do cut interest rates, where are they going to go? Likely stop about 3 to 3.5%, unless there's some sort of emergency pandemic again or something else like that the Fed needs to cut to zero. I think the days of cutting rates to zero are behind us, and as they should be. But you know, people are addicted to the liquidity sugar high, and once we get off of that, we should be able to see some real true positive market action, price discovery, as they say. All right. Let's see here now. Save that here, and then I wanted to take a look at a couple of other charts as well too. We see the banks will be coming out with earnings tomorrow morning. JP Morgan is one of them. Not a great looking chart over here, but I did add some calls on this one. Bank of America next week. Again, not another great looking chart, but I did add some longer term calls on Bank of America as well. One stock that I had was taking a look at yesterday was Lilly. Lilly had a really strong day over here, and had a good move above $370 yesterday. So that's one I had my eye on. But also CrowdStrike had a tremendous day yesterday, and it looks like it's going to make a run up towards this 145 level. We did add some of these in the chat room yesterday, and then finally I was looking at Intel here, and then it's the stock that I've had for a while. I had a rough day yesterday, but it just pulled back on moderate volume over here. It was a lot of the other semiconductor names. The stock's made a really nice run since the beginning of March, up about 30%. And they do have earnings coming out soon. The stock got really overbought over in the early part of April, and now it's just pulling back, correcting a little bit here. So if we get some support here, this 20-day moving average is coming up. It's about 30, almost just under 31 right now. It's coming up fast. Comes up to the price over here, and we'll see how the stock reacts and responds at the 20-day moving average. So not anything you want to get into right now, but something to keep an eye on if it hits that 20-day moving average and bounces off of there. And then I think that's it for right now. Microsoft was one that we took a look at yesterday. Again, just kind of going sideways here. This is one of those that's coming into the 20-day moving average. We want to see how it responds to that 20-day moving average here. So, all right, so that's going to be it, everyone. Have a great day. Have a great weekend. Monday's a holiday over here in Massachusetts. It's Patriot Day, and the Red Sox will be playing. It's a marathon that day, but I'll be here. The markets are still open, and I'll be here talking about doing the daily bites as well too. So have a great day. Have a great weekend, everybody, and enjoy yourself. Be careful out there. Keep some protection on. I know the markets are up here this morning, and the volatility is selling off, but this is what happened yesterday, right? What happened yesterday, and you know we got to pay attention to what happened. Here we go. We popped in the CPI, and we ended up negative down over here and negative at the end of the day. So you got to be careful of the markets turning south again, like we did yesterday. Volatility is down though, so I maybe we have something to work with here today. All right, have a great day, everyone, and I'll see you guys on Monday. Enjoy the weekend. Bye.